Hi there, welcome to the closing bell on the 12th of November. Finally, some movement in the market. Boy, I was getting pretty bored of the way things were. I'm sure you were too. It's been a very difficult market, hasn't it? But we finally have some sort of a sign that inflation is starting to come off the boil in the US. Is this the big turning point? Do markets rally back to all-time highs from here? I can't answer that one for you, unfortunately. Long-term trends are still down. I still have hurdles above the market that I need to see things go through. But the short term has certainly turned up, hasn't it? Now, you'll know that for weeks I've been saying we had the weekly buy pivot in the S&P 500. So we did have short-term uptrend in place, and that looks like it's carrying on. So I'll just show you, all of the areas above the market where it really needs to go through to make things more bullish. But yeah, there's certainly some more upside, I'd say, after huge moves. S&P up 5.5%, NASDAQ up 7.5% in one night. The bonds, huge rally in those 10 years. The US dollar coming right off the boil, gold taking off like a rocket, and that'll be an interesting chart for us to look at. Last week, it was on the edge of breaking that very important level. And I was looking, how far does it fall if it does actually break that level? And it just didn't break it and turned back up and took off like a rocket. So let's have a look at that chart as well. But yes, big moves. Hopefully, it's a sign of markets turning a bit of a corner for a while, and we've got a bit of money we can make in the short term. So let's switch over to the charts. So let's just quickly have a look at the US 10-year bonds. I'm not going to spend time on it. You should know it pretty well if you've been watching these videos. There is the decade high of around 3.2%. Very important sort of area. If we have the 10-year yield falling back below that level, that will be quite interesting. We're not quite there yet, and of course, this blue line is the 40-year downtrend line. So that is actually a break of that line. So it's a change of trend in those long-term yields. But we could have reached a bit of a high for the moment. So just looking up close, this is a weekly chart of those 10-year bonds. You can see there, there's the highest yield on a weekly basis. The low of that candle is there. It looks like we might be preparing for a weekly sell pivot in yields. So a bit of a turn going on here. So that will probably lead to more buying with, interest rates possibly reaching a high earlier than people expect. I think the Fed is going to keep raising rates. They need to see more on that CPI front than what we've just seen. But the market always is looking forward, and we'll be getting pretty excited about that. So we may see a bit of buying. Now, it could hit that 3.2% region and bounce off, and the selling could resume. Remember, the uptrend is still in place. This is the uptrend in those 10-year bonds. I'll do that there. So that uptrend is still in place. It's not until yields really fall below, 2.6%, that you can really say, wow, the sell-off in those bonds is over for now, and we could see a real settling down. So, it's early days, but it's a sign that you're going to see yields probably fall a bit further here across the board. Which will take a bit of pressure off stocks, and especially tech stocks. This is just the weekly of the S&P 500. We've got the weekly downtrend is still in place. You've got to remember that this downtrend is still, valid and carrying on. We are seeing that false break of the low. Now, this is what we saw a few weeks ago. There's your weekly buy pivot. Then we had another good up week. So there's your first key bar when you get a weekly close above the high of that weekly buy pivot. And you can see there's been no weekly sell pivot. It has sold off, but then it found buying support and is turned back up and is breaking up through that 20-week moving average. So, you know, it could end up just sort of rallying and meeting the selling pressure again. So you've got to be prepared for that. But it's basically just saying, you know, yeah, that weekly buy pivot really did give you that hint, and it's carrying on. And this is why you need to have those lines in the sand. I think I was saying to you last week, you know, it was right down there, but you needed to see it either break down through the low of the structure once you've got that weekly buy pivot, or actually confirm a weekly sell pivot. And it didn't manage to do that. So I was saying, you know, could sell off into there and still take off to the upside, which ultimately is what it's done. So, you know, that's just really confirming this marching higher process. I'd say it's going to carry on now. You know, how high it goes, who knows? The next hurdle for it really is above that. I think, what is that level? 4,300 odd. That's 43.27 in the S&P futures. So above there, it really is saying, you know, watch out to the upside, but there's still resistance above. Ultimately, back above the all-time high really changes the picture. But just above there is when it really can be quite sharp. While it's below there, you're saying bear market rally. Where's the resistance? Watch out if you get the weekly sell pivot up around that 4,200 to 4,300 zone. So we're not out of the woods by any stretch, but it is just changing. The picture is going from that, you know, short-term uptrend, but it is just going to that next level. It's not quite a weekly buy, you know, weekly trend shift. That hasn't happened yet. And on the monthly, you can see the downtrend is still in place. But look, if this month can close out above the high of last month, you know, you'll have that confirmation of a monthly buy pivot. So that would be step one in things turning around. But that doesn't mean it's not going to hit lots of selling pressure and turn back down. So still a long way to go, but finally, some signs of life. And it is from, you know, major support zones. The 1 to 2 standard deviation Bollinger Band below the 20-month moving average. That's, you know, major support. I've gone through this before, that often if the big long-term trend is going to continue, that's where you find the buying support. So it is managing to hold in there, and a big line in the sand below the market there. So down through there, I'm massively bearish. But here, you know, this can turn into something. And who knows how long? Maybe it lasts for 3 months. Maybe it lasts for 6. Maybe it lasts for 2 weeks. You know, but it is just saying risk is to the upside for the moment. So let's move on to gold. And look, last week, it was right down near the low of the correction and never broke through it. And this is the beauty of the market, how it can just make you think it's got to break, and it doesn't. So if I was to look at that from the point of view of, you know, how I read markets, is that you so often get the big retracement. So that if I looked at, you know, this wave higher that it had last month, you know, where's the buy zone of that wave? It is down around here, isn't it? So ultimately, that was the spot, and, you know, didn't break below the low of the correction. And, you know, I was saying last week that if it did, it could really collapse. And I guess that's the beauty of the market, is you have these major levels and it can get so close to looking like, whoa, watch out. It's lights out below here. And if it holds in there, then all of a sudden you get that contra move. And you can see the false break of that low of the correction of the last 2 years. So there's the low there. So now you've had that clear out of positions. It hasn't really carried on with it. It's managed to hold in there, and now it's just blasted off. So from that point of view, you're starting to look at this as a major false break. And when you do that, you're looking at the midpoint of that wave there. And that comes in, we've seen that around 1880 is the midpoint. So you're sort of saying, right, well, the odds are that this will ultimately head back to there. So you want to be able to ride that, take a bit of money once it does get around there out of gold stocks or whatever, and create the free option to see whether it can actually trend higher again from here. So interesting development in gold. A few little gold stocks, so they definitely have been coming back to life recently, and I'm sort of scouting around, so I'm not going to tell you the ones I'm looking at, unfortunately, because I do want to jump on a few. I could show you something like Newcrest, though, for example, to give you a sense of how the gold stocks are looking. I will just quickly show you Newcrest Mining, actually, just to give you a sense of how the gold stocks are looking. This is a monthly chart of Newcrest Mining. So we've got the huge sell-off that happened back in 2011, 2014. All the gold stocks got hammered. So that's the wave I'm making the calculations off. And you can see the sell zone of that wave up here and the buy zone of that wave down here. So on the recovery, we had a nice big long uptrend, which you can see there. And we've got rejection from that sell zone. It's done a lot of work. It's been a really bad time for the gold stocks. But you can see coming in and bouncing right off that the top of the buy zone there on that major wave, and setting itself up this month as a monthly buy pivot. So after that's confirmed, and I have further calculations from there, but it's just shaping up where you'd expect it to ultimately head back to that point of control around 26 bucks. And also you're looking at the false break of that previous major low after the 2020 crash. So you're looking at it from the point of view of, an ABC, where you've got this wave higher, you've got the correction, the rally, and the sell-off, which clears everyone out. And then you've got that wave higher. So the ABC of that being, you say X is that top. There's your A leg down to there. There's your B leg, which doesn't go as high as X. The C leg going lower than A, which is the clear out, and then overlap of A, and you're looking at the buy signal being generated. So that's sort of how I'd look at Newcrest Mining. Big picture, long term, looks like a pretty good spot to start picking some up, and quite a few of the smaller gold stocks in similar areas.